There's 210 billion euros sitting frozen in European banks right now. It belongs to Russia, or at least it used to. The European Union has just taken a significant step, deciding to immobilize these assets indefinitely. Russia has condemned the move as theft. But the question we need to examine is whether Russia has any realistic legal recourse in this situation. Let me walk you through what's happening here. When Russia launched its full-scale invasion of Ukraine in February 2022, the EU moved quickly to freeze Russian assets. The bulk of that money, around 185 billion euros, is held by Euroclear, a financial institution based in Belgium. Now the European Union wants to use those funds as collateral for a substantial loan to Ukraine, which is facing a severe funding crisis after nearly 4 years of war. Russia has already filed a lawsuit against Euroclear in a Moscow court. But here's the critical point. A ruling from a Russian court carries no weight in the European Union. It won't be recognized and it certainly won't be enforced. So what legal options does Russia actually have? This is where international law becomes considerably more complex. Russia could pursue a case at the International Court of Justice, arguing that the seizure violates the principles of sovereign immunity. That is the long-established rule that one nation cannot simply seize another state's assets. On the surface, it seems like a strong argument. Russia could also attempt international arbitration, but that pathway requires mutual consent. Given the current geopolitical climate, securing EU agreement to arbitration seems highly unlikely. Now let's look at how the European Union has structured this legally. They're not directly confiscating the assets, at least not yet. Instead, they're using them as collateral for a loan to Ukraine. Technically, the funds remain frozen, just indefinitely. The EU has invoked Article 122 of the EU treaties, an emergency provision that allows the freeze to continue as long as there's what they call an immediate threat to EU economic interests. That's quite a flexible framework. It could potentially last for years, even decades. It's worth noting that the EU has already been transferring the windfall profits generated from these assets to Ukraine since last year. That amounted to 3.7 billion euros in 2024 alone. The EU's position is that this interest isn't Russian sovereign property because it's being generated under a sanctions regime. From an international law perspective, the situation is genuinely complicated. Russia can certainly claim that this constitutes theft and a violation of sovereignty. In ordinary circumstances, they would have a legitimate case. Sovereign immunity is indeed a fundamental principle of international law. Belgian Prime Minister Bart De Wever is insisting on comprehensive guarantees before agreeing to the plan. This isn't about Belgium's commitment to supporting Ukraine. It's about Belgium's legitimate concern that it could become financially exposed if Euroclear suffers losses or if Russia somehow wins damages in the future. Legal experts share these concerns. Professor Euroclear has pointed out that requiring Euroclear to extend such a concentrated loan to the EU could violate fundamental banking regulations. Financial institutions are meant to diversify risk, not concentrated in a single massive exposure. The European Union has something potentially more powerful on its side, a moral and political justification rooted in Russia's actions, broad international condemnation of the invasion, and the practical reality that enforcement of any judgment against the EU would be extraordinarily difficult. This situation transcends pure legal analysis. It's fundamentally about power, leverage, and the question of how international rules apply when circumstances challenge traditional frameworks. What we can say with certainty is this: those 210 billion euros aren't moving anytime soon. Russia is discovering that when assets are frozen in this context, they are not just cold, they are essentially beyond reach. With Shrita Sen Majumdar, Bureau Report, India Today Global.